Hello and welcome to another update video about Polygon MATIC. So MATIC has recovered a little bit since we've hit the low here at 41.5 cents, which is positive for now because it needed to. Any lower low would have made, again, this bullish scenario extremely unlikely. Even now, I mean, with this strong move down, as I said in the last video, with this strong move down, which was so deep and strong actually, compared especially to that 1-2 setup, it is very hard. It is very hard to count this still as a 1-2, okay? But it's possible, and therefore we leave it on the chart for now after we found a low here at 32 cents at the 88.7% Fibonacci retracement level. But again, a lower low, especially below the red wave 2 at 39.5 cents, in my opinion, will make it very unlikely that this is still bullish. So watch out for that level. First indication that we go lower is, of course, here that low at 41.5 cents. If we take that out, but then if we also take out the 39.5 cent level, I think then we are going to see prices below 31.8 cents, which is the 88.7% Fib level. But for now, in the previous video, I showed you here this descending trend line and gave you as a possible trade setup the idea that, of course, you know, a breakout above that trend line can, of course, be traded long with a retest. That is what I usually like to see, especially in the current market environment, where we saw a retest. We started to move up, took the previous swing high out and moved higher all the way up to the previous swing high, which is usually the first target. So now we need to see where we are. We can now draw a trend line, and I wouldn't be surprised if we now see a pullback to that trend line. Now, there's a few ways of how we can draw this, and we take the wicks in or not. And if we take the wicks into account, then we are already not far away from that trend line. So possible next trade setup idea after this you would have worked out, yeah, with a retest, then engulfing green candle going long, yeah, with the first target usually here the previous swing high. Next one would be a pullback to the trend line now that we can see. I mean, we only have 2 touch points for now, but likelihood is that if we hit the trend line, that there will be a bullish reaction to it and possibly another move to the upside again with a price target first of that previous swing high. If we then take out that previous swing high, and by the way, we can see this as an ascending triangle now. You can see that, yeah, a trend line against a horizontal resistance, probably rather like this, yeah, at 49.3. So if we then take the 49.3 cents out, yeah, we've got a few more structurally important highs here on the chart, resistance levels, and I think a very important one will be this one at 54.5 cents on the way up, purely based on this swing high and this swing high, the previous wave 2 high. Let me see if we have any more support resistance before. No, not recently, but we had twice reacted to that level recently, so it is something we need to keep an eye on. So I think if we break above that 49.3 cents, then the next target would be this one. The move above that needs to be seen with caution, because we've got the 50-day moving average coming down here, which has provided resistance up here already. On the other hand, the advantage of such a trend line is, of course, that we know if we break a trend line to the downside, and then the immediate uptrend is first over. With a target then of the previous swing low at 45 cents pretty much, and if we go below that, then we are coming to that swing low anyway, 41.8, and again, a move below that leads to 39.5 cents. So from this could at the moment, yeah, from an Elliott Wave point of view, Elliott Wave count, as I said, a 1-2, another 1-2, even though I'm skeptical about this. Then if this is a 1-2, we could now already be in the wave 3, and in a wave 3, let's take a look at that. What makes this fairly likely is that we can count this up here as an impulse. So 1, 2, 3, 4, 5. Yeah, we made here a slightly higher high, very slightly, and then pulled back, obviously made a higher low, and we then continued to move up again. Yeah. So we could see here a 1-2, 1-2 again of that yellow wave 3, which should be next. But again, until we break above that swing high here, that would be probably the best evidence that we can get that we are in this wave 3, which would be following next. If this is the wave 3, yeah, it would go very, very powerfully. Because target for the wave 3 would always be the 1.618 Fib extension of the wave 1, the first target at least, and that should take us to around 79 cents. Now from that point of view, interesting, but again, we have a few structural levels to take out. I mean, for a short-term trade setup, this breakout might be relevant above 49.3 cents all the way to that level, but then I would be careful because of the 50-day moving average. Then though, if we go above the wave 1 high, which is here at 62.7 cents, and the 66 cent level, which is here this one, these are the next resistance levels afterwards, then we can get to the wave 3 high at around 79 cents. And if we get here, yeah, then in my opinion, it will get much less likely that we will still make another lower low. So this, especially the 66 cent level, because it is the wave 4 high, the move above that will make it much less likely that we will still see lower levels. Yeah, until then, we still need to have very much on the radar that all of this could just be a correction, that maybe this wave 4 here in white was never finished, and that we still are in a correction, it will make another lower low. This is unfortunately currently, I understand it's frustrating, but from a technical point of view, this is everything I can tell you. There is not much more we can do at the moment. We need to wait how the market now decides, because we are sort of in a range here between these two Fib levels, between exactly the Fib levels that I told you back in January that will be so relevant. Here the 88.7% Fib level and the 78.6. You can see we bounced off here at the swing low, exactly at this 88.7% Fib level that we already formulated here in January, maybe even December. And we bounced off again at the 78.6% Fib level up here. So this is currently the range in which we are, which is highly relevant. Yeah, so have that on the radar. Everything so far with Polygon MATIC has worked out from the Elliott Wave scenario point of view here. We were at over $2 when I gave you that scenario, and we've come exactly to the 88.7% Fib level, bounced off. And a lot of people say TA doesn't work in the current environment. Well, take a look at the level, yeah, that I gave you already in January and how we reacted to it. I mean, you know, with the accuracy of less than a cent. So I think that is pretty good. And TA is always relevant, even in situations where the macroeconomy is crashing. It is just because support resistance levels are always relevant. They are, you know, and yeah. We are following this through. So gave you pretty much all the information I think that you need here to make your decisions, hopefully. And hopefully you liked the update about MATIC. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, check out the channel membership. Thanks a lot for watching. Bye-bye.